Welcome back, ladies and gentlemen, to episode 11 of the Learning to Read Chart series. So, how do you develop your own price targets? I always give price targets, and sometimes people think I'm insane, I'm crazy, no way, that's not possible. And then it hits the target, and they're like, "Oh my God, how is this possible? How did you know?" And I'm like, I didn't know, so to speak. It's just that if a company continues to trend to the upside, comes down to the purple line nice and cheap. Let me pull up SoundHounds. Let's look at NVIDIA. Great example, right? I always tell you guys, NVIDIA, very easy money. It just keeps going up, comes down to the purple line, gives you a big discount, goes to a new high. Big discount, goes to a new high. And if it wants to give us a big discount, it should come down to 168. Whether that happens, who knows? But when it comes to that purple line, which is very rare because it's one of the strongest stocks in the market, it's a massive discount. Now, how do you find price targets for NVIDIA? Well, that's very easy, my friends. Let me show you how easy this is. So let's go back in time. It touched the purple line right here, right? And we can grab our price range tool, measure from purple line to the highest resistance, which was right here, 140 bucks. So in the past, in 2024, July 2024, what happened? We hit a high of 140, dropped to a low of 96 at the purple line. You bought there, right? Because that's what you do. You buy at the purple line. And you have your first target. That's your first target right there. You know for a fact that it already went to 140. You know that it keeps going higher over the long term. So it's inevitable. It's inevitable. It's a magnet. It's inevitable that we're going to go higher. So 140 is doable. That's not being greedy. That's actually very possible. It can do that. It can go from where it's at the purple line down here to 140, and it's a 45% return. That's why I always tell people you can make quite a bit on NVIDIA if you wait for the purple line, because it can move 45%, which is quite a lot, for something this expensive. But the question is, what's the next price target then? If we know it keeps going higher, what's the next price target? You can just take profit at the previous high and make your 45% and be happy. That's not bad at all. You just sit on the position, it goes up 45%, hits your first target, boom, you make money. Now, how do you find the second target? You use big round numbers. That's how you find the second target. People love these big, I don't know why. I don't know why people love these round things called numbers, and they have zeros. I have no idea. That we are human, and we are the way we are. And for some reason, we fall into this pattern of, man, I really like, zeros. Like, I really like these, they love, zeros. I don't know. I don't know why people love zeros, but they do. So that's literally your next target, is whatever the next zero number is at the end. So by that, I mean, right, 140. Wow, we got pushed down from 140 to a low of 91. Shocker, right? What a shocker. 140 on the dot, 00. So we would assume that because people love nice round numbers, usually by the tens in this case, we would assume that the next one is 150. Right? 150. And then from there you can go to 160. Oops. And there you go. And just like that, you found your price targets for NVIDIA. And guess what? You would have made your 60% because it did actually go up there. It took a while, but it did go up there. But because you were greedy and you wanted 60%, it didn't go up there until June 27, 2025. So you would have had to wait, you would have had to almost a year just to make that 60%. Where if you weren't greedy and you took the first target here at previous high, you would have made your 45%, and then you could have actually gotten back in on the purple line touch, and you would have made another, 20%. So this is why I always tell you guys, hey, if you want to be greedy, here's your price target. If you want to play it safe and take the guaranteed money, right? That first target is always going to be easy money. Always. Anything beyond that, you're being greedy because you never know where the top is going to be, right? We don't know that this was the top here. It went to 153, then dropped to 86. We didn't know that this was the top. So if you bought here hoping that it would move 60% and it would not have, it would not have moved to 160 because it only hit a high of 153, then came down to 86. You would have just waited all this time for it to just to make the 60% when you could have just been less greedy. You could have just been less greedy. This is why I say greed kills. Greed is the killer. People want more and more and more and more. They'll be up 45% and be like, no, I want more. And then it tanks and they're like, oh, I should have taken the profit when I was up. I should have just taken that first price target. That first price target that you make for yourself is the easiest money you'll ever make because it's inevitable that's going to go up there. It keeps going higher over the long term. It's a magnet. We're going to get there regardless of whether we chop around or whatever. It doesn't matter. It's going to get there. Even if we dump to 50, it's going to come back up there. It's just inevitable. That's why I always use that term. It's like a magnet. That level is a magnet up here. It's going to come back up to it. And I always tell people, just don't be greedy. Take that first price target, take the 45% and then reposition. So you would have taken the 45% here, and then it would have come down to the purple line here. And you could have measured like this level up here, like, oh, 21%. And it did exactly, it went up there exactly on the dot. And you would have made a nice 21%. Then, here you would have just waited for it to come back till June. But you would have made way more percentage-wise. Meanwhile, the person who was being greedy wanted the 60%er. They'd just be waiting almost a year just to make that 60%. Meanwhile, you would have been making way more. So greed is what kills. And greed is what stops you from making more. Because you're so focused on, I want 80%, 3,000%, 200%, 150%, 120%. You're so focused on these numbers that go up, Call of Duty, right? Numbers go up. Oh my God, Prestige 1, whatever. Like you're so focused on the numbers that you forget, hey, take the 45%. And if it comes down to that purple line yet again, like it did here, you can make another like 20 to 40%. And guess what? Boom, you're up already 65 to 90%. Meanwhile, the one who was very greedy and waiting for 160, well, they had to wait almost a whole year. Only to make 60%. Meanwhile, you made 65 to 90. So that's why I always tell people, please don't be greedy. Greedy. Too many people that are greedy. So yeah, that's how you do it. I mean, we can go right now in current time. We can see purple line here, high at 212. 26% return. If it comes to the purple line, it's inevitably going to come back to 212 and you will make 26%. That would be your first target. And then we would go from 212 to 220, which would be 30%, right? That's a nice, nice 4% extra. And then from 220 to 230, which would be 37%. And so on and so forth. So that's the easy way to do it. The easy way to make price targets. Let's look at something a little riskier. Rich Tech Robotics, right? We know it comes to the purple line and then always goes to new highs. So you can measure here very easily. From purple line to highs, that's 124%. Does it keep going higher over the long term? Yes, it does, right? Yes, it does. It's slowly going higher over the long term. Slowly going higher over the long term. So 743 would be the first target and you would make a nice 124%. Of course, you're going to make more because it's a cheaper stock. It doesn't take many dollars for this to give you big returns compared to something like Nvidia. Now, the next target, right? We know that we round up to the next big zero number. So from 743, we would go to 10. And that would be about 200% return. And then from 10, you can go to 20, but I think that's just greedy, right? We're just being very greedy. Unless you're willing to hold for like a lot of years, then sure. But I mean, if it goes to 20, you make 530% return. But let me ask you this. What's more likely to happen, right? What's more likely to happen? Your first target to hit or the third one? Probably the first one. But believe it or not, there are people that are very greedy. They're up 100%, 200%, and they just keep holding because they don't want to sell. They're afraid to sell because they're afraid that it's going to keep going up and they're going to miss out on an extra percentage, even though they've already like tripled their money, quadrupled their money, doubled their money, which is kind of stupid, kind of insane, right? That people like start thinking that way. Like, man, I'm up so much. I don't want to miss out and make more. I could make more. So I'm just going to not sell. And then it comes down and they're like, oh, God, I should have sold when I was up 200%. Now I'm only selling for 10%. Well, I might as well just hold and see if it goes up another 200%. And then the cycle repeats. So that's, yeah, people are that dumb, believe it or not. So this is why I tell you, regardless of what stock you're trading, whether it's something safe like NVIDIA or something riskier like RR, taking that 124% is the safest thing you can do. It's the safest thing you can do. It's the easy, and 124% is nothing to scoff at either. If you wait for 207%, what if it doesn't go up there? What if it only goes to $9.59? And you're just sitting there like, come on, hit that $10 target, and then it just comes back down to the purple line. You're like, oh, I was up 124% plus, and I didn't take it because I wanted that extra 50 cents. Like, that's happened. I've seen people do that. They're like, I'm gonna sell it exactly. Mara, I'm going to sell it at exactly 25.80, and then it goes to 25.79, and they don't take the profit by 1 cent. And that happens on the other side of things, right? People tell themselves, I'm going to buy this penny stock at 0023. I'm looking at Sybil. And then it goes to 0024, doesn't ever touch 0023. And you know what ends up happening is Sybil stock explodes, and the guy that was waiting for 0023 just sits there like, oh, I missed out because I just wanted it, a 0001 cheaper, which is kind of like ridiculous, right? So, works both ways, but really being greedy in terms of wanting to get in cheaper and being greedy to the upside in terms of profit taking, it can hurt you. This is why I tell you, just, this is doable. It can actually go back to 743 because it's already done it before. Longer term, yes, it could go 500%. Whether you're willing to wait that long, who knows? But the guaranteed money is always better. Quote unquote guaranteed money, because anything can happen. It's a riskier bet. It's not NVIDIA, so I can't say that with this stock. But that would be that first price target is always going to be the moneymaker. After that, if you want to be greedy and hold for more, go ahead. Just don't cry if it like tanks 30% and you're like, oh, I should have taken profit. That's really the biggest takeaway here. If you follow my rules, right? Let me show you. If you follow my rules, so let's see. It came up to 5. You bought here at the purple line, and then it finally moved to 5. Oops. Then it finally moved to 5, and you made 230%. And now you're getting a second opportunity, and boom, you can make another 123%, right? And that'll be a total of 350% return over the course of like a year and a half or two, which is not bad. But you know how people are; they want 1,000%, which is just silly. So yeah, this is if you did this. Now that you know how to find price targets, if you did this back then here when it touched the purple line, I mean, you would have made 230%. You would have just sat there on the position and waited for that exact level that we know is very doable, and it did do it. It did go up there exactly, pull back, but you still made your money. You don't care at that point. It can go to the moon if it wants. It could have gone to 8,000%. You don't care. You made your 230%. I'll reposition at the purple line on this stock or another, and I'll make another 100% and another 50%. The biggest issue is people don't have patience for these price targets. They want lots of money fast right now. So don't be greedy. Don't be greedy. Take profit at the first price target. Scale out if you want. Maybe you sell half here and then another half if it hits your second target. It's up to you how you want to take profit. Some people scale out. Some people just, it hit my target, I'm selling. Like if it goes to the moon, cool. I don't care. I already made my money. I already made my 200%. I'm good. You don't. The stupidest people, what they do is they just hold it all the way back down because they were so greedy that they just wanted more and it comes back down and they keep hoping that it this is it, right? Like you better believe there are people that this happened to. They're holding up here at $7 hoping that it's gonna go to the moon, and then it just comes down here and they're like, oh my god, this is it. This bounce here, oh my god, this is it, and then they hold it all the way down. And unfortunately, some people hold it all the way down to their average. Why? Because they're dumb, obviously. Like, imagine someone telling you you're up 200%. Do you take the profit or hold for a potential, extra 500% more? Right? It's kind of like that question. Do you take the million or do you take a chance at 10 million? I will always take the million. You can have fun gambling. I'll take I'll take the guaranteed money. Right? If I'm already up 200%, what's the problem? That's all I got to say. That's it for this video. I'll see you guys in the next one.